Hey, what's going on, everyone? Welcome back to the channel. I apologize for not releasing a video in the past few days. I've been dealing with a flu, um, you know, fever, body aches, the whole nine yards. Now it's like everything's in my head and congestion and yeah. So again, haven't really been too active, but I did manage to take a trade today. It was a trade to the short side. I still want to emphasize that this strategy that I'm going to show you guys, I'm going to show you guys two setups. This strategy still remains the easiest strategy that you guys can use for trading futures or any asset class for that matter. It's the good old 20 SMA play. It's looking for changes in trends, but it's more importantly sticking with the trend until otherwise proven wrong. Okay. So if you notice, going into the New York session open, we had the previous pre-market candle close below the 20 SMA. I understand a lot of people don't like to trade the open because it's super volatile and it moves a lot, but setup is a setup. Again, you can't just ignore certain setups just because you personally don't like the time of day. As soon as the market opens up, it confirms this 20 SMA play to the downside and puts in a 73-point candle. Okay, you could have taken this for a little bit of a ride and been one and done. Now, I missed this trade just due to the fact that I was, still in bed and, just trying to get my life together at this point. But we did have one of our evolution traders, Dave. He was working with a lot of the people in the community this morning doing his live trading show. And, they were putting down some trades and making some money. One thing that I did want to share with you guys is that this morning when I jumped on their morning call, I said, just kind of stick to the shorts until something proves otherwise, right? So just look towards the shorts. And the reason being is the first trade setup of the day was short. Okay, we got below that prior swing low from pre-market and the market was trending lower. So even though you get a 20 SMA play here long, you're still well below from where we opened up. You're well below the 5-minute opening range. There's nothing here on this chart telling me, oh, big reversal, right? Now, if you were to see this kind of trade sideways, and then you get some big washout candle and then a big wick back up, and then we close over the 20 SMA, that would tell me maybe we're going to reverse. But this is just a lot of grinding action that is, kind of just seemingly going to the side and if not down. So I really tried to focus, even though it was through text, but I was telling a lot of the traders in the community today is just, stay short. Just stay short until otherwise noted. And this trade right here at 9:45, right? I'm in California, so 9:45 Pacific. If you notice, as soon as we got back below this 20 period moving average, I mean, it flushed and it went from a price of 21,501 all the way down to 21,367, right? So I mean, we're talking, better half of over 100 points, right? And it came out of nowhere and it came quickly. You didn't have to take this whole move, but it definitely, it flew and it flew, right? Stay short until otherwise noted. So what's the strategy, right? How can you guys make money with it? Well, you want to see what we're doing in pre-market. Okay. So if I look at the pre-market, I'll see that essentially London was going sideways. Okay. London's going sideways. And then going into the New York Open, it kind of starts to sell off a little bit. So my brain is automatically, if I take out the previous swing low from pre-market, I want to stay short. There's no indicator here that I want to just, oh, we're going to bounce and we're going to go long. No, the range was essentially stagnant. It was just going sideways with a little bit of a sell-off here. So all I'm realistically looking to do is when we break out, excuse me, when we break out either through the lows or the highs, that's the side I want to stay on until something shows me that we get back inside that range. So what's the range? Well, look at the previous swing low from pre-market. Once we broke through it, we're underneath the 20 SMA. We just stay below it, right? There's no long here because we're not back inside the range that could potentially test the highs. Does that make sense? Start picking up what I'm laying down, okay? So your first 20 SMA play is short. Now, whether you choose to, scalp in and out of this like a madman is your prerogative. but your next short position came right here, right? Came right here, closing back below the 20 SMA, and then flushes for 125 points plus, right? So realistically, you could have jumped this short here and got out into prior swing lows, or you could have taken the short here once we got through London lows. Make sense? And then all of this action, you just kind of sit and diddle your thumbs and, sit back and count your money from this trade and don't do anything until you get another short. And that's here, right? Right here. Again, the simplest strategy. And the reason being, why are we not looking for longs? Why are we not looking for longs? Because we're still underneath the range from pre-market. Now, if this was to bounce and get back inside range, then sure, we can start targeting longs to maybe go up to London highs. But because we're below London lows, you want to stay short, okay? So just wanted to do a little recap. Again, I apologize once more for not putting out a lot of updates. This flu this time around really kicked my ass. So with that being said, make sure to leave a like. Also, if you guys need Apex accounts, you guys can use code DAnthony. And if you guys want to trade with myself and the rest of the guys and girls in the room, you guys can also join Evolution Traders with the link down in the description box below. And I'll see all of you guys on the next one.